Good morning. You saw the post on social media there by the dip. Well, I guess others had the same idea, and it happened overnight. Bitcoin plunged down to 60,000. So, of course, where do we go from here? Well, the probability was it was going to bounce. We were hopeful we'd have a little bit more of a dive this morning, so that's not happening. And I think, what do? We look to the left and we see where is it likely to bounce to, which doesn't give us much upside. And the S&Ps here, you can see it's coming up toward this minor resistance area. And this isn't a pivot. Why isn't that a pivot? Why isn't it marked at the top there? Well, simply because it doesn't have three lower highs to the left. But common sense tells us that there was a poke. Right? I called it a poke bar in the bar by bar course, um, to recognize that as it's going to be a pivot in a smaller time frame. So it's stalled there. Applying retracements. It was a nice retracement off of the low, which of course is going to be a wide range bar in a higher time frame. And then we can see that on the daily. So resistance, as I said, is minor resistance there, and major resistance is further up. Unknown where it'll get to. Um, the SPX will be a better guide as to strikes there with higher open interest versus the S&Ps, but again, we'll see how that reacts. You can see the 5-minute chart is beginning to chop sideways there, which are these overlapping bars on the 65-minute, which is still, overall is positive, even though it's a red bar, as you can see. It's what we call bullish price action, or the concept of absorbing supply in this time frame. This is still, in a downtrend. It may be transitioning. Well, of course, like every day, we'll see where a bar ends because the time period's not over. And while there's probably going to be, of course, there's going to be some selling today because that's just the way it works. The extent of the selling is the unknown, and we'll just have to see how that plays out, which we'll be doing in the room today, of course. Especially when it gets up to a stiffer resistance area. It's always an area, not a finite location. And then we just see how it begins to chop back and forth as it's doing here. But we want this type of price action to happen in the correct location and alignment with other indices. We don't have that right now. It's just, as I said, chopping sideways. When we look at other markets, see what they're doing, and so obviously the futures, they broke down severely and went down to the next location. And 200 MA, it is a futures contract, so I put less weight on that moving average as opposed to the QQQ. Nonetheless, with 24-hour market, and look to the left, just like everything else, and it bounced from there. So we had a convergence of major support and a moving average, and so buyers stepped in at that area, and we had the S&Ps coming down to a support area. So now, when prices accelerate like this, odds are you're going to get some kind of a bounce. Right? We would say that's pretty severe damage has been done to the chart, that it's violated on a closing basis, multiple pivot lows, and it comes down to the next one. Buyers come in. The angle of retracement is powerful, but it creates a void. And you can see how the way it came down on the 65-minute, you can see the congestion area right there. And maybe that's where it gets to. And the whole number of 25,000 could be a targeted area. But these charts, arrangement of these patterns, right, the structure says the upside is limited before sellers reemerge. Well, that's the bias. We'll see how it reacts. And even can it get up there? Or do sellers come in and take advantage of this little advance and just dump it again? I'm sorry, I didn't see that. It said greater than 100% retracement. Well, 100% retracement and greater than 100% retracement is positive in that time frame, but a greater than 100% retracement, and our thought process is that prices are going to stall once that happens. And being at resistance, uh, it's going to stall there, but sometimes it retraces more than that, takes out the high. And some traders view that as a breakout. And while it has broken out, let me do a little drawing thing here. Right? Breakouts or breakdowns, right? There's a breakdown which occurred from a consolidation. So after a move down like that and a consolidation, it's building support and resistance, opposing pivot highs and lows. Now, it could bounce up, but you want to have a bias to go with the trend. So that's a breakdown. Whereas if something was like this and came all the way down, greater than 100% retracement, some would say, well, there's a breakdown. Okay, it violated some support, but our approach would be to either short a retracement or see if it goes sideways and then down again, which could be the 1, the 2, 3, continue down. So everyone approaches things in the way that they want. With a greater than 100% retracement, it requires a very large stop, which theoretically could make the reward to risk not worth doing the trade. And so here, and I don't know if that took it out, the low, but here's a great example of the concept, meaning it was at the top of the range, it fell down below the range. I'm eyeballing this, it looks like it stopped right there, but let's just assume that it did, and greater than 100% retracement, you're going to put your stop up there? Hell no. Something falls like this, which we've been doing, right, in the room the last several days, get a big drop into support, and then we look for some kind of bottoming action to do the counter trend trade, which is what this is. It's a counter trend trade. So that's part of what we call it. Everybody calls a trading plan. How are you going to approach the structure in the moment to trade it? So looking at the Russell, this is still in an uptrend at the rising 50 MA. Does it being Friday play into your decisions and expectations? To a certain extent, because the week is going to end. I think that's the obvious. And whether we talk about concepts like Christmas rally, Santa rally, summer rally, whatever type of generalized concept, it's Friday. You have to put it in the context of what's happening right now. What's the trend? Up, down, or sideways? Look at multiple time frames. We could look at internals. And so it's a normal, not a normal, I would say a question that often comes up because of the way we all approach trading in life. Meaning we're looking for consistency. That's a good thing. It's our job to bring consistency to what we do in what is obviously, especially what I coined the Trump effect, an inconsistent environment. Right? So we're looking for that consistency and certainty. Right? So let me build some trading plan that says, if this, do that. Well, that's a good thing. If something has fallen sharply into an area of resistance, and even if it's taken out that resistance, then look at a smaller time frame, look for stabilization to trade the bounce. Or if it's in an uptrend and pulling back to minor support, look for a setup to trade the bounce. And then you have to define your patterns, which is what we do. Right in the room or in a course, we define patterns. So just because something comes to an area where you believe it's going to reverse, how are you going to trade that? Which then leads to another layer of analysis. If I trade, say, this on a closing basis, and I know that this is in an uptrend, but resistance is right there, how am I going to handle the position and money management. All of these layers are what an education is about, right? So primarily, most would just look at something and like, oh, that's a bullish candlestick pattern, so I'm supposed to buy that. Well, really? Well, how are you going to manage it? How are you going to put that candlestick pattern in the context of what I've been talking about? So it just goes into a big conversation, which we can have in the room or in courses and, part of a course. But look, now look at this mess. What do you do with that? Credit spreads, right? Credit spreads. This is the kind of pattern that lends itself very well to credit spreads. Directionally, heck no. Just a bunch of overlapping bars. You can trade it intraday if you choose to. These are nice little moves, just a 5-minute chart. So I can take something like this and create a trading plan around it for day trading, but for swing trading, no. For credit spreads, yeah. I'm not saying credit spreads on the Dow on these futures, but we take this pattern and apply it to anything. All right, let me continue here. I guess part of the big story of the bounce was Bitcoin getting down to that 60,000. So another very sharp climactic type of a move into an area of major support, and it bounced. So this is acceleration. This is a little climactic. It came out of it. We talked about this consolidation over these months, and this little buy setup there, and it suggested it was going to go up, and it came back down, and now it's fallen sharply, and so now it starts the whole process again as it comes down to this support area. This is one bar. It's not even done. Does it go sideways? Does it just rip higher? How are you going to trade that? Position and money management. Ethereum, same story. Look to the left, down on that major support. It's bouncing up. Same story. And gold. This is starting to build a base. This bar is not done. But if it was to close like this, rather than a 1-bar reversal, we've got a higher low in the beginning of a turn. So we got to watch for that. Right now, it's coming up to a major resistance area. So nothing to do. And silver, that got clobbered yesterday. And turn day, there's nothing to do with this. I mean, if somebody's thinking accumulated, I suppose. And that big wide range bar is huge momentum, and it created a void. And then maybe it could have made the turn, and it failed. So you got to decide how you're going to trade something like this, right? Everything. So this coming down to this pivot low, as a day trader, you could trade that because my bias would be it's going to bounce. As a swing trader, no. Okay. And so we looked at that. Bonds. That was something yesterday. This was just money saying, I got to get the hell out of this. Right? That is, there's no more hope left. This is the software ETF. And look at the size of that bar. That's the weekly chart. There's the daily chart. The same type of acceleration to the downside. And much is trading right now. That's software. The bonds here moved up to major resistance. So interest rates went down. Money went into bonds, came out of other things. And now we'll see what this is going to do. And over here, it had broken down. And I think this would have continued to break down. Look at that bar right there. And this bar, right? This little shock bar. Historically, right? Price patterns, recurring patterns suggest blah, blah, blah. Right? Same, similar result. This was the result of the market and influence there. So now, as this starts over again, does it roll back over? Or does it hold? What's it going to do? So we'll observe that. And here's, the 10-year, a big drop to the downside. And so this will have to start to rebuild again. And we'll see what that's going to do. And so a lot of whippy price action, which we've been seeing, and yeah, we wait for things to tighten up. So as SPY, it's gapping up near the top of yesterday's bar. You can see where the cursor is and into some resistance. So there's just nothing to do for me right now. I see it consolidating up there. You can see on the 5-minute chart. Um, I need more information as to how to handle this. It may just roll right back over. It may consolidate. We'll see if it can go higher. And you know, coming down here, same story, 100%, greater than 100%. If it was opening lower this morning, we'd be looking for some kind of a turn. And there's some news coming out at 10 o'clock, consumer sentiment. So be aware of that. Yesterday's numbers, and I said it was so far away, it was unlikely to even remotely get down there after such a drop. And this actually, I'd have to look and see if the numbers changed from a little while ago. But it was interesting that if you remember this number, I mentioned 6660, and then things came up a little bit and we moved it to 6665. And now this morning, even with this bounce, the number came lower. I'm just looking to see. Oh, see, now it's adjusting. Now it's 6667. Oh, so it was, you know, I say, wow, the bearish sentiment is still in force. And this hasn't come up much this morning with this bounce. So, you know, sentiment should be bearish after a day like yesterday and the last several days. Just scrolling to get the other one, which probably adjusted 69.30. And so it came down. Interesting. It's tightening up. This is what usually happens with these strikes. When you get a big move, they get really far apart. And then as I erase that by mistake, whole thing, the text, now they'll start to tighten up again. And you see the range tightened a little bit from yesterday was 100. At the beginning of the week or the end of last week, I think it was at like 40 when it was up here. So range expansion, a major support. It's bouncing up here. We'll see where it goes from here. See you, Dan.
Good morning. Happy Zero DTE Day. You know what? Whenever I watch the news in the morning, I'm looking for, particularly with a big gap of what the catalyst is. Many times it's obvious, but today it's not. The entire time I've been watching the news since 6:30, I didn't hear one single comment explaining the turnaround from last night's overnight lows, the Qs, and I was excited. I think it's a five. Um, I don't know. It was down like 10, 12 bucks or something. And so that's exactly what I wanted for today to have gap and snap heaven all over the place. Um, and so the news, I didn't say once. Is it because the currency or the DAX opening or Trump saying, doing something? But it doesn't matter. I just found that interesting. Thomas Sierra Mike, a big old mess, no pattern to me except shorting 1850 puts. Deck is better. I'd like it to come down a little bit more and then get a potent reversal, but nice weekly. I'll put it on the list. There's a ton of Climos. Here, I'll go ahead and give it to you all again in case you came in late. A lot of Climos, which would be fantastic for zero DTE. Second, I'll post it on social media here also. and earnings, I went through a ton of them already, but Climbos galore. Hood, those Bitcoin stocks bouncing. I've been watching this one for a few days. Unless we get a real potent turn, like, with a 180, I'm not sure I trust it yet for next week, but definitely for today, I like it. If there's anything at the 72s, any of the ETFs, just wait 5, 10, 15-minute high and go look at the quote table and make sure they're liquid and see what you can get paid to put it out of the money put spread. It's going to be that simple today on these Climbos, at least. Hood, same. Mr. Last night it was, this is an earnings stock, but it gap, I saw it at $100, which would have been a great gap and snap, but now it's up at 115. Same 0DTE. Getty, we had an alarm. We're in trail mode. I had an up alarm. It's not very liquid, so we'll just wait for the open. Finex, another Climo, but no turn yet. I think that's it. Oh, Oscar, we sold in the strength yesterday. We had long calls. That was another REIT. Rig T is our only open short. Let's see, where is our stop? Rig T 1680. Oh, 1682. All right, it's still far away. So that's fine. Let's go to earnings. Amazon getting killed. And when Amazon announced last night and had a bearish reaction, we looked at the Qs. I made the comment, like, I said, wow, I'm shocked the Qs are only down 15 cents with big old Amazon gap and so bad. But this as a put spread idea, 30-minute high, wait for stabilization, premiums should be jacked. But that's, what, capping down to low 200s, that's a big old topping pattern. You got an unfilled gap here at 195. That'd be a nice place to put on a put spread if it continues to sell off into 10 or 1030. SWK alarm. This was one I was hoping we'd get a 1, 2, 3, but it kept rallying. But I just had an up alarm go off. Flowers alarm went off, but that's now extended, but that was a breakout setup. UTZ. John, I think that was yours from yesterday, and I said wait for a closing breakout, and you got it. So that looks like it'll move higher. Otex alarm, another Climo gapping up. You can buy over yesterday's high. IoT, another Climo arm. It's a new low reversal on volume. Ideally, we get an inside bar, and then on Monday we can trade that. In fact, the earnings here. I thought I saw it last night down like $8. So the fact that clawed its way back to break even, but there's no pattern. See, I would have loved it. I capped to the 200 here. New low reversal. Mr. We talked about Roblex put spread. Gap in the 66, 30-minute high. It's going to be the same vanilla type approach here, but coming to the green room and we'll watch them in real time. But what we're looking for is Climos or other bullish patterns, 30-minute high. But Reddit, I gave an official trade to sell, I forget what it was, the 120s or something ridiculously far away. And it was spready, so I did not get filled, unfortunately, but 30-minute high or some type of pullback here. I like this. as a put spread and directional as a climb up. I mean, 260 to one, down 110 points. Even if it gets to 170, 175, I'll take it. Microchip was more bullish than neutral this morning. Now it's breaking down under 74, so that would be a call spread. But semis are up. Semis, I see, are gapping up. Team, another software, but see how there's zero reversal on this? That's just bearish price action. So it is a climb up, but zero turn. Now I don't know what's going on Docs. I know it was earnings, but I mean this thing's capping down $11. That's insane gap. Look, where's support? That's gapping all-time lows. What the heck did they say? I got it here in the middle chart. Let's just watch it. Look at Mo here. I'm assuming it was earnings. Yeah, it was. Look at that nasty gap. And I checked the cousins. Wow, that's gapping to multi-year lows also. I got to go back here more. Let me do it real quick. Yeah. Okay, so somewhere in the low hundreds, it should stabilize. I mean, look, we sometimes talk about Obamacare. Look, this is a perfect example. Look, Obama, and then just rocking $50 to 400 plus. And our rates skyrocket for us individuals. OTEX, Flymo, I mentioned. That's a nice one. The gap, that'd be a good 30-minute high. Put that in a window. Lion. Actually, a call spread or a day trade short under yesterday's low. Aluminum. I have no bias yet. That's a nice wide range breakout. But now I see it gapping up too much. Had that open flat. You could have bought the high. DLR. I like the gap. That could be a 5-minute high. 5-minute high, DLR, not bad. Got an opening tick here. Over 700 is bullish. Shoot, OTEC is taking off. Yeah, I'm looking at the puts here on DLR, but I'm sure it's a waste of time. An earnings trade in the first 5 minutes. Yeah, it's not even open yet. ARM alarm. I hope it closes like this, but you got to decide. Is it a trade to nibble yesterday's high? It looks great. That's a nice bottoming pattern with yesterday's reversal on volume. Looks good. I mean, I'll wait 30 minutes, but it looks good. AD line gap to 1600. This OTEX ran too much. Akamai. I can find better. I don't like the way that came down, and you're at 15-minute resistance. Finex up alarm, maybe 30-minute high. GRC alarm. That was actually a call spread idea. That was earnings. So if there's anything at 61, Yeah, mags are definitely relative weakness, that's for sure. Look at Amazon. Amazon, that's ouch. Microsoft still weak. Netflix weak. Google. Hmm, that's an amazing gap reversal yesterday. Pfizer, too sloppy for me, Thomas. You know, just it's just not a high quality pattern. Unless you're trading the bigger time frames, then you just give it a stop under Wednesday's low and then see what happens. TTC alarm, we're in trail mode. Wow, this is a grinder to the upside in our favor. Let's move stop 95.88. Yeah, that ARM looks good. Yeah, there's a lot of climbers. All right, all four horsemen are bullish 5-minute bars now. Apple ripping in the FANG department.